to everyone. Again, I'm welcoming everyone to the video, namely functions of the commercial bank. Right. So this is in continuation with my previous video, in which I brief about the functions of the commercial bank, and in detail had a discussion about the primary functions. In this video, particularly, we are going to talk about the secondary functions as such. But before I to the directly to the secondary functions, let me recall what we have done in the first video, part 1, in the primary functions of the commercial bank. Right, this was the entire diagram. This is just a quick recap of the entire functions of the bank. They are divided into two major parts. First one is known as primary functions, and second one is known as your secondary functions. So we have already seen the primary function, that was accepting deposits and granting of loans and advances. We have also seen that in order to constitute any financial institution as banking functions, or as a banker, when any organization need to term it as a banker, or they are dealing in banking services, so primary function forms the most important part. Right, now coming to the secondary functions, so they have the agency functions. Quickly, it is when the bankers are acting as a agent on behalf of their customers. And as far as utility functions are concerned, they are other than these three functions, the primary and the agency function, whatever functions and whatever services, products and services the bankers are offering to their clients, to their customers, will be covered under utility functions. So whether they'll be issuing the credit cards, whether they'll be issuing any kind of advising functions, standing guarantor, or they're giving any kind of clearing house services, or underwriting the shares and debentures. So we are going to check, we are going to see what are the various sub parts that are included under this utility functions of the bank. We should have started with the primary functions first, and then we'll be concluding by the secondary functions. And we are also going to understand that what are the basic differences between the primary and the secondary functions. So in order to recall, the primary functions are the mandatory function in order to constitute the term banker or bank. Right, so it is divided into two parts. First one is the acceptance of deposits, and the various modes of accepting deposits, or accepting cash, or accepting funds from the public is demand and time deposits, where savings in current account are known as your demand deposits, because payment can be made and deposits can be made on demand. Right, then we have FDs and RDs, fixed deposits and recurring deposits, which are also known as time deposits, because they are having a specific time period for their maturity. But it does not mean that before maturity they cannot be liquidated, they cannot be withdrawn. They can be prematurely withdrawal, but there are certain laws related to it. Right, the second function in the primary function is your lending and investment. Refer it to providing or granting loans and advances to the general public, or the loan seeker. So when we talk about loans, we have home loans, auto loans, personal loan, educational loans, consumption loan, etc. And then we talk about advances, facilities or services, we have cash, credit, overdraft, and discounting of various types of bills. When we talk about these cash, credit and overdraft, these forms the modes of advances or types of advances. Now, the functions of the commercial bank, secondary, these functions are not mandatory. And if we talk about the primary function, there was a line which states that these functions, or the primary functions, are the mandatory function, that every bank entity need to perform those functions or those services. But secondary function depends upon the suitability and feasibility, whether these functions are performed by the banks or not. So these are not mandatory functions actually, but may go for offering these services to their customer in order to go for the higher revenues, profitability, and other factors. Right, so the first part of this secondary function is your general or utility functions, general or utility services. Right, so in order to provide several other kind of services, banks go to perform these kind of functions to the customers, to the general publics. These are like your safekeeping of valuables. The first point is safekeeping of valuables, generally known as providing locker facility to its customers. So when we talk about locker facility or safekeeping of valuables, so bankers are providing, or banks provide the facility of lockers to safekeep the valuables of their customers, such as the golds, diamonds, jewelry, any kind of title paper or the ownership documents of land or property, right? So what it constitute actually, it is a small metal cupboard sort of with a lock in it, or we can say an almirah has many lockers in it. So these almirahs are put in secured room. That room is known as strong room or vault, where cash is also being included in that along with the lockers, right? So the purpose of having this safety keeping of valuables or locker facility or issuing locker facility to their customer is to have the safety concern, right? But why banks are issuing this? In return they are charging the rent. So it's not the fees, it's what they are charging the rent from their customer in return for that providing locker facility, right? So it can be an annual rent that is being charged with the customers or from the customers, right? Now second point is arranging foreign exchange. So when we talk about arranging foreign exchange, it is generally the work or the job is oftenly performed by the exchange bank, but commercial bank also go for these kind of activities. So banks convert the currency of one country into the currency of another country. Say for example, I'm going to any other foreign country and I am in requirement of that currency. So I can go to my bank and ask the banker to convert my INR or Indian rupees into foreign currency. That may be euro, that may be dollar, so that may be any currency. If bank is having that currency, the bank are allowed to go for foreign exchange. The other financial institution are also known as money exchangers or indigenous exchangers. So they are also carrying out these activities. Banks are also accepting the foreign money. Simply, in simple words, when a foreign customer is coming to India or for traveling purpose of on visa or for any other reason, so if he or she opens an account and wants to convert their dollars or their pounds or their foreign currency into Indian currency in order to spend here, so these kind of services are also given by the banker to its customers, right? This issuing of credit instruments. So when we talk about issuing of credit instruments, which means that all the modern banks issue various instruments of credit and deals in them, and these credit instruments can be bills of exchange, right? Credit notes, providing letters of credit. So these are known as the credit instruments. In other books it can be written as providing standing guarantee, sort of providing letters of credit to the importer and exporter banks, right? When you are going to sell, when you're going to purchase, so having these kind of guarantee statements. So in that case they are also going for these performance of these issuing of credit instruments. Other is your discounting of bills and exchange of hundis. So hundis are traditional form of promissory notes or these bills, negotiable instruments. So banks generally goes for discounting the bills and hundis on behalf of their customers or for their customers before their date of maturity, and of course by getting the amount of bills in advance of the due date, the businessmen enjoy a great advantage of better money circulation, and at the same time banks charge certain rate of discount, and that's why they are known as discounting of bills. They are charging a fixed percentage, and as the case may be, so that also forms the mode of revenue to the banks, right? So continuing with the secondary function, the first part we have covered, that is general or utility functions. These are few of the examples to state under general or utility functions. Now the other part of the secondary functions is your agency functions. So agency function, the concept talks about the agency function is when bankers are acting on behalf of their customers, so they're termed as the agents. So when bankers see himself or herself or itself as the agent of the customers, so they are dealing and they are entering into the relationship of agent and principal. That also we are going to see in the other videos where we'll be discussing about the various special relationship and general relationship between the banker and customer, and one of the relationship is agent and the principal. So what we mean by that is when bankers are collecting and receiving payments, and similarly when bankers are making payments on behalf of their customers, so what they are doing, they are acting as an agent on behalf of their customers. So it can be when banks collect payment on their customers' bills, checks, promissory note or hundis. Moreover, on receiving proper instruction from the customers, banks collect their rent. Banks collect the interest on debentures, dividend, right? Any kind of loan amount they are receiving. So when these kind of services are being given or provided to the customers, they are known as, they are coming under the umbrella of agency function, where banks are accepting or banks are making payments, right? And they are acting as the agent on behalf of the customers. Similarly, they are, when they are making payments and whenever they are receiving the payments, they are also collecting certain kind of commission. So bank charges commission for these services, whether it's collecting or receiving the payments on behalf of the customers, or when they are making payments on behalf of the customers to the third parties and to the vendors, right? So again, the second is buying and selling of securities on customers' behalf. So similarly, when they are collecting payments, and when they are receiving payments, and whenever they are making payments, and whenever they are buying and selling securities on behalf of their customers with the help of demat accounts. Banks also open demat accounts on customers' behalf, and they are dealing in equity and all these. So when they are buying and selling securities on behalf of the customer, they are also charging a certain kind of commission on that, and these are also under the umbrella of agency function, where bankers are acting as the agent. So third and the most important is when banks are acting as the trustees. So if somebody recalls, when I was giving the overview about the secondary function, so I said there that in some of the books, trustees is also known as by other name, that trustee functions, but literally it is coming because the bankers are acting on behalf, acting as trustee on behalf of their customers. So it is again falling in the category of under the umbrella of agency function, but few authors have their own suggestions and discretion that they are keeping this function or this acting as a trustee as a separate functions in different books. So it is also known as trustee as a function. What it means actually, in short, if we talk about trustee as a function, a trustee is someone who has a legal control of money or property or both, that is kept or invested for the economic benefit of the beneficiaries. So customers will be termed as the beneficiaries, and bankers are termed as the trustee. So modern banks manage the property of their customers as their trustees. So directly they are also acting on behalf of the customers, therefore they can be fall under the category of agency functions, right? So this is how they are joining hands. One is the banker, another is the customer. So when they are acting on behalf of the customers, so bankers are also performing the agency function. That is the simple conceptual background of having the agency function. So we have covered the two parts. The first one is the general and the utility function. The second one is your agency function, right? The other part, or I should say, that has not been included in the diagram, but other functions also, that are other ancillary services, that includes the providing informative services such as advising, issuing credit instruments, standing as a guarantor when banks are issuing letter of guarantee or letter of credit to their customers on behalf of their customers issuing, right? So issuing credit instruments such as credit cards, letters of credit, etc., issuing gift checks and cards when banks are going for the underwriting of shares and debentures. This is a different topic. Underwriting of shares and debentures mostly forms the part of the merchant banking and investment banker sort of, right? So all these things, when we'll be discussing the investment banking, so we will be coming up, and I'll be sharing the how the entire process of underwriting of shares and debentures is carried out by commercial banks, right? It is mode from where the banks are earning their revenues, right? Again, the clearing house, it gives the rise to the clearing, performing the clear house function, clearing of checks. Actually, it's a process whereby checks are being collected. So it's coming under the ancillary services, right? Now coming to the major portion, that is the differences between primary and secondary functions. Although we have covered that primary functions are the mandate functions, these are the main activities of the banks. So in order to constitute a bank must perform these activities. Since these are the primary functions or the primary services, every bank need to maintain and perform these primary activities. Or secondary functions, these are the secondary activities which banks may or may not perform. Why I am saying it like may or may not perform? Because every branch does not have the locker facility, so it is on the secondary part. It is not necessary but that every bank has to issue the locker facility to its customers. No, it is not mandatory as such, right? So that's why it is falling in the category of secondary function. Similarly, every branch, every bank does not perform the foreign exchange. Every branch does not invest or does not offers the golds and bullions. They does not deal in the gold and bullions, right? Every branch does not perform the functions of issuing the credit cards, or I should say every bank does not gives guarantee on behalf of their customers, right? So there are few cases which segregates, which have a clear cut demarcation between the primary and the secondary functions. So primary functions are the main activities every bank has to perform. Secondary function may or may not be. Second one is the primary functions are the main source of income, right? And secondary function are not the main source of income, right? Third, these are obligatory on the part of the bank to perform. These are not the obligatory on the part of the bank. These are compulsory. Primary functions are compulsory to be performed by the banks, and these are not obligatory. These are not mandatory parts. Secondary functions may or may not. With these words, thank you everyone. Thank you so much.